Bitcoin hasn't had the best few weeks, leading many to believe Bitcoin is doomed and that this cycle is different. Let's see if there's any evidence to support this. Today, we're going to be seeing if Bitcoin is currently on track, meaning if it's where we'd expect it to be at this point in the cycle when comparing it to previous Bitcoin cycles. As I said, we've had a pretty torrid past few weeks, with Bitcoin going from around the $30,000 level to recently over the past few days reaching lows of $25,000, which obviously isn't ideal, especially when we look at the comparison between traditional markets such as Apple and other US equities and even equity indexes like the S&P 500. We can see we had a fairly decent run up a few months ago and has really just been on a constant downtrend since then, which is potentially a little more disheartening considering we have actually seen a little bit of a bump up in the more speculative equities such as Tesla. So there's a little bit of underperformance from Bitcoin in the cryptocurrency markets compared to traditional assets. But if we just go to the BTC growth since the cycle lows chart here on lookintobitcoin.com, we can see really that comparing Bitcoin's percentile returns to the previous cycles, given the amount of days that have passed since we set our lows, really, we look absolutely fine. If we just zoom in on the most recent price action up to about 400 days, we can see Bitcoin bottomed out about 300 days ago as I filmed this. And really, we're not doing too bad at all. We're actually outperforming, or very recently have just started to underperform the returns from the 2015 to the 2018 cycle. But since we've set the lows, there's been periods of outperforming not only that cycle, but also the 2018 to 2022 cycle, which is really promising considering that we're really expecting diminishing returns on Bitcoin over a more macro basis as the asset class grows, matures, and expands. If we just zoom out a little bit here, we can again see that there has been diminishing returns, meaning less and less exponential growth to the upside with each cycle that passes. And this is to be expected really, especially considering Bitcoin as an asset class has grown absolutely massively and will continue to do so. The capital inflows required to increase an asset's market cap from say $1 billion to $10 billion is significantly smaller than increasing its market cap from $1 trillion to $10 trillion. So really it's expected that the percentile growth of Bitcoin on a cycle to cycle basis is going to decrease, but really considering where we are right now, there's nothing to worry about. And especially if we look at the global M2 money supply year-on-year rate of change compared to Bitcoin, we can see there is an almost obvious one-to-one correlation. Once we see this blue line here, which is the global M2 money supply, or the total amount of cash equivalents, savings accounts, etc. in circulation amongst some of the largest economies on earth, we can see here that once this starts to increase, once we see some stimulus in the economy, central banks and governments potentially trying to avoid a recession or maybe just aiming for larger economic growth, either way, we can see once this starts to increase, we usually see Bitcoin increase fairly noticeably too. And again, on the contrary, once we see this start to contract, once we see economies maybe start raising interest rates and trying to contract the economy a little bit, we can see Bitcoin usually has negative drawn out bear cycles during those periods too. But we can see once this actually starts to bottom out and start to increase, Bitcoin doesn't necessarily rally immediately to the upside because it's more of a speculative and volatile asset. I think people wait for a little bit more of a confirmation before reinvesting their capital in the digital asset markets. We can see here in every single circumstance, Bitcoin had a little bit of a consolidation period, bit of upside, bit of downside, a little bit of indecisiveness in the markets as this really rallied before a little bit of investor confidence came back into the market and we saw these exponential moves to the upside for Bitcoin. And the same is true for this time. We've seen global M2 bottom in the year-on-year rate of change and start to increase noticeably. We've seen Bitcoin have a little bit of a sideways period. We have moved up fairly notably, but we are having a little bit of retracement now. But ultimately, it looks like we're on track, especially given Bitcoin's correlation to the typical 4-year liquidity cycle we see around global economies. And if we look for more on-chain clues to gauge the situation of Bitcoin, we can see here looking at the value days destroyed multiple, which is looking at the total coin days destroyed for BTC, which is looking at the total amount of Bitcoin that a wallet has held, how long it's held it for, and seeing after it's moved how many coin days destroyed it actually adds to the chart, and then comparing a short-term average of that value to a longer-term average. It's a little bit complicated, but if you go on to look into Bitcoin and scroll down, you'll get a bit more of an in-depth explanation. But we can see after each single bear cycle, Bitcoin typically has this capitulation phase where we see this large orange spike to the upside. It's happened in every single one of Bitcoin's most recent cycles, and our current cycle is no different. We've seen this large orange spike to the upside as Bitcoin bottoms out in price. But we then see the next stage of this cycle where Bitcoin's rally from the lows gives us these orange values on the VDD multiple. Again, it's happened in every one of the most recent cycles, and again, this cycle is no different. Obviously, the values do fluctuate somewhat as market conditions are always going to be slightly different. But after we've had these runs off the lows in Bitcoin's price and this VDD multiple go into this orange warmer color, we do see a little bit of retracement and we get this green area of VDD multiple, which suggests that maybe traders and investors got a little bit ahead of themselves. Maybe we had a bit too much of a steep rally off the bottom, potentially just liquidating short positions, and we have a little bit of a cool off phase, and we see again this VDD multiple go back into this green area to potentially give investors and traders who are a little bit more patient and looking at a more macro basis for their positions maybe one last chance to really accumulate at heavily discounted, great risk to reward prices. And once again, this cycle is no different. We've seen this VDD multiple retrace back into this green area, suggesting great risk to reward for patient, intelligent investors as Bitcoin has retraced from the local highs it set around $30,000. Now, of course, this doesn't necessarily mean we're definitely going to see this. We are, of course, just looking at what's happened in previous cycles for comparisons. But really, like we said, that's all we can do without wildly speculating to try and predict the future outcomes of an asset that is so speculative and volatile. So once we actually look to previous comparisons, historically they've worked well, and until we really see some real hard evidence that maybe circumstances in this cycle has changed, I think Bitcoin really is currently on track with where we'd expect it to be. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out the resources we've covered today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, given the days passed since our cycle low, Bitcoin's percentage returns so far are historically in line with where we'd expect them to be. In fact, if anything, they're slightly better than what we'd expect them to be, given Bitcoin's diminishing returns on a cycle-to-cycle basis. Also, when taking into account where Bitcoin sits within its current halving schedule, we're at comparable levels to previous cycles, something we didn't touch on today but will touch on lots of the next few months, as Bitcoin has a scheduled halving event where the inflationary rate of Bitcoin is going to decrease by 50%. This is only going to decrease the incoming supply while potentially increasing the demand for Bitcoin. And if we look at the days past compared to previous cycles, as well as the days until the halving event, really again, this just reiterates the fact that Bitcoin is currently on track. And also, Bitcoin is seemingly once again aligned with the typical 4-year global liquidity cycle that we see, as represented by the year-on-year change of the M2 money supply, which is another promising signal. And really, I think people just need to realize that retracements are completely normal. Bitcoin is a volatile and speculative asset. We are going to have periods of extended drawdowns. We are going to have some red weeks, some red months. But ultimately, we need to zoom out, look at a macro basis, look at not only Bitcoin's on-chain market cycle and fundamentals, but also for a global data point of view. We look at economic charts such as the year-on-year change, and really it just reassures us that Bitcoin is where we'd expect it to be, and there's not anything to be dooming and glooming about right now. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know down in the comments down below and on social media, do you think Bitcoin is currently on track? Are you happy with the opportunity that we have to potentially accumulate more Bitcoin at discounted prices? Or do you think we are in fact due for a long extended bear cycle? Maybe this was just a bear market rally before we set new cycle lows. As I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.